Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, January 9th, 2020. This will be sort of a potpourri mix, an eclectic mix of various things. We'll just start out like I like to do with a look at the broad markets, what's going on there, and then we'll roll into a few trade ideas, some updates on some existing trade ideas, and won't go too long. I know I'm going to cover different things, but we'll be quick, and I'll do my best to keep it under 30 minutes. Here we go. There's that ascending broadening wedge. Volatility has expanded on the market. We are still in an uptrend. This market refuses to go down, hasn't broken the key support levels we need to see go. That 86.94 still well intact. So far, a little bit of an impulsive rejection off the top of the ascending broadening wedge pattern, but plenty of work to be done. So that's it. Again, nothing's changed technically. Market grinds higher. The divergences are still intact. Big impressive rip off that low the other night with the missile attack, and we're still kind of holding up near there. But again, like I said, a lot of divergences and a potential bearish pattern here with this broadening wedge pattern. We'll see if that pans out or not. So keep an eye on it. And if we start move down impulsively, you can see the support levels on the way down. And the way it works is if and as each support is broken, that opens the door to the next level. And then, of course, ultimately a breakdown below the ascending broadening wedge pattern, this line here, should do the trick. That should seal the deal and potentially open the door for a much deeper move. Market's strong. Price action is very strong, but what happens is things get overbought. Trades get lopsided, meaning too many longs, not enough bears or shorts, and the market gets heavy and then it corrects. So we'll just keep an eye. Right now, like I said, those short-term sell signals from what was that, a week or two ago, are just barely hanging in there. Again, the divergences are intact, but like I said, this market refuses to go down. Better fish to fry elsewhere right now, and that's why I'm going to get to the other some trade idea updates here in a second. But there's the nice clean ascending broadening wedge on ES, the S&P 500 E-mini futures. There it's what it looks like. So what we'll need to see from here, if it goes up much more, sure, we can keep drawing, but then we're not going to have the three distinct reactions like we would have here if we get a rollover right there. So really want to see this go down, or I can just say this, it chips away at the bearish case if we push much higher in the indexes from here, because again, like I said, we're not going to have nice three clean reactions on that upper trend line there. RTY, I'd like to update that every now and then. Small caps, I haven't even pulled this chart in here in a while, I haven't covered it. They're still below where they broke down. Remember, this was on December 27th. We had a nice clean, here I'll zoom in a little bit so you can see it there, nice clean uptrend line. And as I had mentioned before, first the small caps broke down, then ES, the S&P 500, and then finally the NASDAQ. And so the small caps are, say what you want about them, but they're in a downtrend right now. It's a little questionable because, a simple definition of a downtrend is a security making a series of lower highs and lower lows, and that's what we had up to this point, but we did just take out that previous reaction high. Now look, we could still draw it like this: reaction high, reaction high, reaction high there, but I like to see these zigzags at least to keep it nice and clean. We didn't really want to see this one validated or taken out, so that again starts to draw in, call into question the the downside, or the any additional downside for the time being in the small caps, because we don't have that clear downtrend. We could also draw a channel like this. We're working our way down in, and we've kind of broken above that channel. So again, we're still below these two previous reaction highs, but like I said, I don't have strong convictions on the market and haven't for a while. They just continue to grind higher, defy divergences, hold support, catch support on the shallowest of pullbacks. But there's an update in the levels to watch. And like I say, be prepared. The markets have a uncanny knack of catching the masses off guard, and that's what sentiment readings and all that all what they're all about. When complacency gets very high and everyone just has given up on the fact that the market can never drop again, and you gotta buy, and you start getting that fear of missing out, that FOMO thing going, that's usually when at least a correction is close. And those are levels to watch. I just added another support level there, about 1667. Okay, on to trade ideas. Let me update this one. I haven't updated it in a while. On let's see, let me pause this and show you the video. Okay, so before the Thanksgiving holidays, on the Swing Trade Ideas video on November 4th, here's all the stocks that were covered back then, including Habit, HABT, Habit Restaurants. And again, you can just use the search function, go under resources right here. This gets to the support center, and down towards the bottom there's a search by ticker or tag symbol, and you type in HABT. It'll bring you up to any mentions of HABT, including this one. I think this is the only time I've highlighted this stock. And what I did at the time in that video is highlighted the breakout, and I stated that I prefer I think it's better to wait for a pullback on that one and then buy it. It was a breakout, but what I had said at the time, it burned a lot of energy, expended a lot of fuel just to get to the breakout point. So it's been my experience. Now, we had a breakout here. That was the first breakout. I didn't have it back then, or at least didn't highlight it, and then caught it here. It was really strong, ran up. But when you see a stock burn up so much energy, expend so much fuel to get there, and what does that mean? Well, look, if you went from oversold to overbought in one fell swoop, you usually don't do that on the RSI. You can barely see it down below on the video there. But anyway, so I said, pull back, and then my target on that one was $13. So for those of you that took it, be aware, you got your pullback. It's exactly, and that's about as objective as it gets. It back tested the trend line, then did it again. If I would extend that trend line there, so you had two back tests, just a little below the breakout point. So that was the most objective entry, and you could have bought it there again, and or if it pulled all the way back to that very, very good support. Former resistance, now support at 983. So either way, if you're in it, I just want to say that it's been acquired. It's bought out by Yum Brands. Yum Brands, KFC, I think Pizza Hut, Taco Bell, all those restaurants, they bought Habit. And just as a little takeaway, so if you bought the back test or anywhere near there, you're up about 35% on it. You might as well just go ahead and sell it, because when you see a stock and these little tight candles like this, you don't see these trading like this, you see just tight ranges, that is almost always an acquisition. It means the stock has been bought out. I remember years ago I had a stock, and it was all of a sudden it just wasn't moving. I was up, had a nice pop, and it took me a couple of weeks to realize, hey, why isn't this thing moving? It's trading these trading ranges, and I didn't read the headlines. That thing was acquired. So at that point you just sell it. It's not going to go up or down unless a deal falls through, and that's very, very slim to none. I haven't read up. You can Google search it and read about it, but I just want to say that one's done, gapped up above the target. If you had a sell limit order at 13 or just below, you would have not been filled there. You would have been filled at the open. That's how limit orders work. They're going to fill at 13 or better. So the stock gapped up on the takeover news to open at 1388, where all standing limit sell orders would have been filled. 1383, I'm sorry. So congrats to those that caught it. Let's move on to the next one. Let's talk about, we'll spend too much time on crude because I already did an update today, but I followed up on the under the comments section below. I made some additional posts, and one thing I said is, so far almost a perfect reversal. The low of the day was 58.60, I think 8, something like that. It overshot, hit almost a perfect tag of that 58.69 support in a reversal. And so what I'd said, if we continue to rise here, a little more work, what's going to happen, I think that's going to be pretty bullish for crude, because as I pointed out in the video, this was a nice clean looking bearish pennant. A bearish pennant is a continuation pattern. It's very similar to bull flag, as I covered in that video. You have an impulsive leg down. There's your flagpole setting up with a pennant shape on decreased volume. Then an impulsive breakdown is your sell signal. And so part of trading is recognizing chart patterns. That's first and foremost, bullish or bearish chart patterns. But then there's a deeper element. It kind of comes with time to learn and try to recognize which ones are going to play out and which ones won't. Because as I like to say, there are fewer things more bullish in trading than a failed bearish breakdown of a bearish pattern, just like there are a few things more bearish than a false breakout to the upside. And why is that? Well, one of the reasons is, traders are saying, oh, okay, crude had a big leg down, it's consolidating, there's a bearish pennant, I'm going to go short on a breakdown below, especially impulsive, and they did. And if they weren't, depending on who they were, I'm just trying to put myself into other people's shoes, trying to see the way they're seeing. So they shorted, but then all of a sudden, whoops, stock reversed. Number one, that's already a failure. You want to see that the nature of a bearish pennant or a bear flag continuation pattern. You want to see the move on the breakdown equally as impulsive, and the measured target, now sometimes it goes a little longer, sometimes a little less, but the measured target and the move is pretty much equal to the move down. And so the fact that, take all those away, that we've already bounced back has pretty much foiled it. But once you start to get above the flag, then that's the what I call the POR, point of recognition, or those that shorted. Right now we're back testing it, so we could take another leg down. I don't want to get too excited about this. I never get excited about any one trade. Leave your emotions at the door and you'll do a lot better. But that's it. So we're back testing from below. We could get a rejection there. Still a decent chance that we go on, take another leg down to hit my trend line, and then have a more lasting reversal. If we do, as I said earlier, that's still an objective entry. The next, if any thrust down to and not too far below, I wouldn't add below it, and I wouldn't stop out immediately. But that's how I look. I buy up to down to that trend line, but don't keep adding to along below it. And then have your stops somewhat below in case, give it a little room for a momentum fueled overshoot or a stop raid, where they know where the stops are going to be set. They know longs are going to buy on that trend line with a stop just below. So when they know that shorts will jump in on a break of the trend line, and so sometimes the market makers and the powers that be and the algos will let that happen. In other words, to turn around and gun it. If you have enough capital, you can move the markets by hitting with a flood of buy or sell orders. You or I aren't going to move the market, or especially something like crude oil. We might move a penny stock, but we're not going to move this. But the big institutions trading with billions of dollars can. So that's how that works, and that's why you give it a little bit of room. And again, should we start to move up and over this flag, then you could get a pretty swift punch up to 61.17. That target there, as you see a lot of short covering, as well as bargain hunter longs, stepping in. They were a little too nervous to buy its support because it was in free fall, but then think that the correction's over. And like I said, that's I'll give you another level right now just in case, because sometimes what I like to do on a trade, if I'm not sure just how far it might go, is instead of booking profits just shy of that resistance level, just trail stops up. Keep trailing stops up, tighten stops up if it gets near there, because it may blast on through there and head up to the 62.17 level. So that's that. Probably contingent on what the stock market does. So I have some reservations about how far a bounce in crude might go, because again, the market's getting heavy, but the trend is up. So as long as the trend's up, we're okay trading crude. The bullish trend in the stock market should give us another lift back up here, I think, especially after that big drop. And palladium, I have not forgotten about palladium. We were stopped out on the official trade. I mentioned that the other day right after we were stopped out. PALL was a proxy. I always use ETFs or ETNs as the official trading proxy. There's our stop right there. So that was hit. And I just need to, probably I give myself a D or an F on as far as updating the trade ideas. But I always say this: go into the site when you're looking at trade ideas, come in here, and if you're looking at active trades or trade setups, all you have to do, I'm slow load today, all you have to do is click on the trade on the ticker symbol, and it's going to then load down below. It'll load all the post related to that trade. And so if you go in and check either the original post, which will give you the trade parameters usually, meaning your buy points, your stop, or any updates, because sometimes I'll revise stops. That's it. If I haven't revised a price target or a stop, let's say a final target was hit, that's it. The trade is completed. It may continue to run. I may continue to post updates, but I'll, get a chance. When I get a chance, I move those away. This one's still active, but some of these are not. So like I said, you can just click on it. I mean, let's look at Fizz. Fizz is an example of many. I mean, you look at a lot of these, and it's just a consistent pattern in 2019, really, I think the algos have just completely taken over this market, and they've sniffed out very objective looking levels. So here's Fizz. I had Fizz, on a buy trigger over 43.25, stop at 38.49, and here are my targets. And so we're going to pull a chart of Fizz and do an update just for those of you that stuck with it, because like I said, I just give suggested stops, suggested targets. You guys decide what stops you want to use. All right, so here's that trade. And you can't make this up. And my site, I don't think it has nearly enough people trading, unless there's some big institutions out there picking up on these trades to to move the market. But again, this was not a very highly actively traded stock. Look at that. Look at that stop rate. I don't know if you can see it there. You zoom in. We hit a low of 38.28. That's just a brief. And I remember on the 1 minute chart, it was just a brief, quick plunge. It wasn't even like we kind of grinded down there. It was an intentional stop rate, whether they hit my stop, yours, or whatever reason. And then look at what the trade did from there. And again, this is a beautiful display of technical analysis, other than that nasty stop rate that took us out. But we went on. We already had hit the first target, so the trade was a success. Especially if you booked profits or raised stops there, which I usually suggest doing after first target is hit. We went on there. Perfect tag of that, by the way. Pulled back, and this is why I list multiple targets. You can also find that in the FAQ page under the support center as well. Why do trades list multiple targets? I explained that because each level is where a reaction is likely. So you got a reaction, that's a pullback off the first target, and then what did the stock do? Took the next leg up. Perfect tag, 1, 2, 3, 4, multiple tags of that second target, almost to the button. And then another reaction, right? Came back down, tested the previous lows, and held successfully. There's a double bottom. And then what did it do from there? And again, you can't make this stuff up. Boom. That's close enough. Remember, I set my stop loss orders, or the sell limit orders, just below the actual resistance level. So the resistance there is 58.22 on that line. I'm sorry, did I say that right? Yeah, 58.22. Why did I have... That's odd. I must have meant to do that at 57.92. But either way, it's moved. The trade was stopped out. It hit a high of 58.10 versus my line at 58.22. So see, I would have adjusted that. That should have been 57.92. Again, I always set my sell limit orders on longs a little bit below the actual resistance level in case the buyers step in early, and that was the case there. So again, I'm doing this again. If you're in the stock, it already hit, and that's the final target. And I also say in the FAQ page, the final target, not always, but most of the time, 90% of the time, is where I think the end of the trend will be, and that's where the risk reward is no longer very attractive. So had you taken that one, it would have made sense to either tighten stops up if you're going to let it ride and hope for a backfill of this gap, or to book full profits, and you can see it's already given back a good part of that. But look how this one trades to the technicals. It's fallen back to this former, that's the T1 level right there. 46.09 was a target. You can see the lines at 46.18. Remember, I set it a little bit below, so I was 9 cents below there, but we're on that level now, or hit it recently. So again, just kind of an update, and sort of I wanted to do the the FYI on how to make heads or tails of these trade ideas. Put a lot of hours in this site, and it's just sometimes I get behind on moving these out into the completed trade categories. I like to post an update on them when I do. So I just wanted to share that. That's how you can find the, see if any trades are stale at that point. And again, the charts are still there. These levels, like I said, you could have referenced this even today and still be trading off these levels, because they've certainly acted, as support and resistance since, and they will probably continue to do so. Alrighty, next up, NG, natural gas. I mentioned I think it was yesterday's video, that we have a price channel forming. Here it is, and we were right here last time, so you can go long at the bottom of the channel. We're working our way up. They dipped a little bit below the channel briefly. Let me tighten these lines to get them nice and tight, but you can see that most of the 60-minute candles, or all of them, close right on or back above, so we're still holding that channel for now. Again, I don't have a high degree of confidence in there. I just pointed that out, and I update this because I know a lot of traders on the site love to trade natural gas. I love to trade it too, but I like to wait for the the highest probability entries. It can be a tricky sucker at times, so wait till the chart's really set up for your ideal setup. Your ideal setup and mine might be two different things. People ask me my opinion on charts all the time. I'll give you my opinion if I have one. Sometimes I don't have an opinion, and there may be something in the chart I just don't see. We all have different trading styles. We all use different type of trend line drawing skills and ways to identify support and resistance levels. So I'm not saying that my style is right or wrong. It's just again, if I don't see a chart that's clearly bullish or bearish, I don't force it. Trading can be tough enough don't force trades. Wait, patiently for ideal setups. I like trend line breaks, support resistance. You can see a little trend line right there. It was broken. Boom, got that. All right, and I looped all over the place here. I was talking about palladium. Palladium's starting to get a little wonky here. The price action, you can see just like before. And this is what I was talking about in the stock market. When volatility starts to expand after a slow, steady grind up, you start to get this expansion in volatility. That's usually when things are about to crack. And we're starting to get that. It could continue for a while. You can see of all the lines, you can see 3 lines on this 60-minute chart of PA. This is the most important right here. There it is. There's your primary uptrend line. There's some secondary and even a secondary and tertiary trend line right there. We'll kind of chop through that one, so let's watch that. In the last update on palladium, after it was stopped out, I had mentioned that a very likely scenario, and actually my preferred scenario, would see it go on, and this is a daily chart here, to make a marginal new high. We're still below this previous high. This is a 18-month daily chart here. This was the previous high. We were right here or so at the time, and I said, here's what we'll probably do based on the posture of these indicators at the time. We'd probably go on, make a marginal new high. If so, it'll be a divergent high. This orange line could turn back down quick. It moves faster than the white line, so we could still put in potentially a divergent high here on both the PPO and the RSI. And again, this is the same trend line I just showed you on the 60-minute chart, and you can see, that's, look for these trend line breaks and divergent highs. You get a divergent high, then that's not a sell signal. What's a sell signal is a break of support after that, and you can see there, trend line back tested, divergent high, will drop. Sometimes you get a sell signal with a bearish engulfing, or I'm sorry, a bearish candlestick pattern, some type of reversal pattern, and sometimes you get the support level breaks, horizontal support, but that's it. So this will most likely coincide with a drop in the market, and there's still a lot of hot air to come out of palladium. I think it's going to be a monster short sometime in the not so far future. ZB, remember we had that divergent high. It blew through that 157.065 support. We're still below the 155.040. That'd be the most objective buy point if we got it, because what's going to happen is if we get another leg down, and we may or may not, it all depends on what the markets do, because remember, they're at the top of those those broadening wedges, and if they reverse soon, you'll probably start to see treasuries rally. But if you get another leg down, so maybe treasuries reverse from here. Like I said, there's no way for me to know that. There is a little small divergent low right there. You see small little divergence right there, and sometimes that's all it takes. Some impulsive reversals so far. Got to reclaim that 157.055 level, meaning support once broken becomes resistance. If so, you will most likely head on back up here to hit the 158.221 level again. But if we get another leg down, look, you could have dual support levels. I like when a stock or security falls to dual support, such as price support, meaning those previous reaction lows, as well as downtrend line support. So there's one scenario. Well, there's two scenarios to look for, a couple scenarios, and that's what I go over in these videos. And the best, my advice would be to just replicate these charts if you trade Treasury bonds or Treasury bond futures. Replicate the charts, or maybe you see something that stands out that I don't see, and let me know. Post it below this video. Hey, Randy, I'm looking at this on CB. You missed a support level or a trend line or something else. I get a lot of trade ideas and updates and clarity on some things I'm trading from other members on the site, maybe pointing out things that I've missed. So I welcome those posts. Anyway, all right, let's move on to the next one. Here's GLD gold. I don't have a strong opinion, but I get a lot of questions on this one. There's always a lot of interest in gold, so I'll just update. There's a potential trend line right there, uptrend line. Remember, overall bullish when we broke out of this symmetrical triangle defined by the blue lines there. We had that previous reaction high, which was and still is an important resistance level. We had what now, in hindsight, we can say with certainty was a momentum fueled overshoot, overshot that level by a couple days and then dropped back below it here, and we're there. So again, as I pointed out, I believe gold is in a bull market. I think it'll have another leg up near term. I don't know, could just as easily see a pullback here. I think a nice objective buy point, as long as the charts confirm at the time, if it were to pull back to that 142.85 level, that's pretty decent support. Remember, we were overbought. PPO is kind of rolling over high levels, but gold, like I often say in a bull market, any security, including gold, can hit these overbought readings, kind of just take a little breather and then continue on up and kind of shrug them off. So you don't have to correct in price always, especially in a strong bull market like the stock market's been doing lately. You can correct in time by moving sideways for a little bit and then having the next thrust up. So so what is the takeaway from that? Well, long-term traders, I think it's still, no reason to change any of your position. If you're in gold, obviously you always want to have your stops in place. Would I be adding here? No, I would wait for a break above that recent high right there because we've already overshot the level. So if we power back up, then we'll probably get the next leg up in gold. So, the risk reward, why add to it here? I'd either add on a break above the recent highs or pull back down to 142.85. And, if things get ugly, there's still plenty of support below. There's still that trend line there that could come into play. So we'll see. I'll update that if I see anything that stands out right now. Again, my near-term convictions on where it goes aren't very high. And GBTC, I'll update that again. Bitcoin, that's coming back in. I'm trying to be careful with my words. I want to say I'm not overly concerned. We had a run up. Remember, we hit the trend line. We're having a reaction off there. We're coming up to that support around 882. Ideally, that level should hold, give or take around there. There's still work to be done to firm up the longer-term bullish case. So I'm hoping to get our, another thrust up, hit at least our second target. The trend indicators down here on the daily chart, still in bearish territory. This circle here shows you. Remember, I used that signal line, the 9 EMA. Is define the trend. It's bullish when the PPO signal line is above the zero line. That's this dotted line, dashed line there. Bearish when below. So all this is saying the primary trend is still bearish, although we did put in a divergent low. So you have bullish technicals. You had a little breakout here, a move up. But this would help the longer term case where, might even, if we're still in the trade, we'd probably have hit our second or third target by the time we cross over. But if that's the case, maybe I'll extend the targets if we haven't, because if we break above this wedge, the bigger picture is this. You have a downtrend line right there. Here's a falling wedge pattern, bullish falling wedge pattern, confirmed with divergences. So maybe this one wants to consolidate a little. Maybe we break out soon. If we do, you can see the next longer term targets. Who knows? Maybe it runs all the way back up there. Possibly, but I'm just looking right now. Let's just say these are the two targets if that wedge breaks out. Now this trade's based, that's a daily chart. We base it, the current trade is off the 60-minute charts, and that's what it looks like here. So we're coming back to those recent candles there, and again, near-term direction. Now the 60-minute trend indicator is bullish. You can see we're above the zero line there. So like I said, I'm still sitting tight with this. I don't see any reason to be overly concerned. Wouldn't be a bad idea to move stops up. I'm leaving that official stop on the trade there for now, again, because that's for those targeting T3. We may come on all the way back to 864. That's where we took the breakout originally. That may hold, and then we may thrust up to 1183. If we go much below there, it's not going to look good. I'll just say that now. So if you want to have a more aggressive stop than 772, I'd have it a little bit under that 864 level, maybe there about 844 or so. And again, it almost goes without saying, but it is worth repeating that Riot and Overstock and those related trades will most likely trade in line with Bitcoin. And here's Riot offering us another objective entry. Remember, 130 was a breakout point, downtrend line first, then 130 level. We pulled back. We hit it yesterday. You had a chance to step in and buy there, and we hit it again. Ideally, I want to see that hold. If that doesn't hold, we might come in for another back test of the trend line. Where this goes likely depends on Bitcoin. If Bitcoin can turn around and rally soon, then we will most likely get a reversal and another leg up off this 130 level, and that could open the door to that next target there at 181. Same thing on Overstock. As far as the fate or of this trade, how it plays out. You had the impulsive leg up. This one's up today, and you can actually, looks like maybe a little bull flag there. Let's zoom down to a 60-minute chart. Oh yeah, I must have highlighted that yesterday. Kind of a quirky looking oversized pennant. Broke out, but we really need to get above that recent high. And again, overstock's probably only going to go so far without Bitcoin rallying. Anything's possible. Sometimes it can rally or go down opposite Bitcoin, but like I said, it's a constructive chart. Back out whatever Bitcoin's doing, whatever Riot's doing. This alone is a bullish looking chart. Big positive divergence at the low, bullish falling wedge, breakout, impulsive leg up. So on that alone, the stock looks good. Just like we had negative divergence at that high, big correction. Here's another bullish falling wedge back here. You can see the positive divergence leading up to that low. And from that point, Overstock rallied after the breakout. It went as high as 192%. So I like the way it looks. This is a smaller looking wedge, so I'm not looking for 192% rally, but I do think this $12 area, possibly that 1490, is certainly doable depending on how the charts play out going forward. Okay, let's wrap it up here. I'll get this out to you guys, and if I see anything that stands out later today, I'll post it. Otherwise, we'll do, depending on what the markets do at the end of the day, I may or may not do a market update. I might cut out early today, so we'll see. I'll keep an eye on things. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.